Welcome. I'm Mike with Penner Investments, and today I'm going to talk about another option strategy that works well for medium to larger size accounts. This strategy has a defined amount of risk with the potential for a huge reward. This strategy is for when you have an idea of the direction of the market, or better yet, an idea of where it will not go. The strategy is simply buying a put option when you believe the market is heading lower and buying a call option when you believe that the market is going to go higher. I've had my highest one trade return from this strategy. When I have a confident belief that a stock is going to go down and go down substantially, this is the perfect scenario to purchase a put option and use this strategy. Remember, a put option represents 100 shares of the stock and allows the investor to use leverage since you're only paying a fraction of what it would cost to own 100 shares of the stock or control 100 shares of the stock. Back on April the 14th of this year, I purchased the April 22nd expiration $345 strike price put for Netflix for $1,545 when the stock was around, I think it was $350 a share. Just a week later, on April 21st, I closed out the option contract for $20,336 when the stock price collapsed to $218 a share after missing their earnings when they reported. This is a 1,316% return, while the maximum loss that I could have sustained would have been $1,545, the amount I used to purchase the put option. Sounds like easy money and too good to be true, right? The challenge is that you have to be right on the direction of the market, and the stock has to have a decent amount of movement for this to pay off, which is hard to do. I knew Netflix was starting to have issues with competition from the previous quarter's earning report and conference call. During the conference call, the company told you that they were starting to have struggles with this. I believe that their troubles were going to get worse and not better, and this trade worked out well. For these types of trades, I do not put a lot of money into them, as there is a higher likelihood that it would not work out as often as other types of trades, but it only takes a few times of me being right for this to pay off. The other trade is buying a call option. This is what initially got me interested in trading options. I started out buying call options on stocks that I believe were going to go up in the short term. I started with buying slightly out of the money call options 45 days to expiration. I did these on Apple quite a bit back in the 2016 to 2018 time frame. If the stock was around $45 a share, I'd buy a call option with the strike price of $46 or $47 with 45 days to expiration. When the stock would spike up in price after some good news or a positive earnings report, I would close out the option and pocket a few $100. After this, I was hooked into trading options. This strategy is a little tougher right now as inflation keeps hammering the stock market and the Fed is raising rates to combat inflation, which also hurts the stock market. Historically, the stock market has always gone up over the long term, so a good way to trade call options is through LEAPS. This stands for Long-Term Equity Anticipation Securities. It's just a fancy word for options contract with an expiration date that's over a year from now. These are more expensive as they have a longer time value, but over the long term, you have a much greater chance of your trade becoming profitable. You also get to control 100 shares of stock for less money than it would cost to purchase 100 shares. The long timeline gives you more flexibility as compared to shorter term options. If the trade is not going my way after 6 months, I can close it out and still have a portion of the funds that I used to purchase the option so that it's not a total loss. On the other hand, if the stock runs up after I've only had the option for 3 months, 6 months, or 9 months, I can close it out at any time and take the profit. It's always nice to lock in a profit when there is one. Even if the stock starts to run away, I may even just close a few of the contracts and let a couple of the other ones keep going and just to see how far it'll go up. These are just a few ways to trade LEAP options, and no set way works for every scenario. If this has been informative, please hit the like button and do not forget to subscribe. Thanks for watching and happy trading.